All right. Very warm greetings to you, class. It's another it's another weekly session, and my warm greetings. And this is just a quick recording, just checking in to see if you are doing your work. Class, at this stage, um, you know the drill. I would like you to focus your um on the pile of past papers. You do have past papers. You have the solutions to those past papers. So it would be a good thing if at this stage you are not wasting time, especially if you have covered the theory, you do kind of understand here and there. You've gone through our channel, YouTube channel. You found lectures dating as far back as 5 years ago. And all of that will show me that you are a proactive student who is not waiting to be fed, but who is actively engaging as you should, given the mode of delivery that we have, which is a hybrid delivery. So at this stage, I would safely assume that you've covered learning unit 2. And I would also safely assume that you are probably looking at past papers and trying to figure out the solutions. You do even have, I think in one of the papers, you do even have a video showing you how that paper was was solved, if I can put it that way, or how each questions is being answered. Um, and but I do have a guest actually. Andile is here. Andile, how are you doing?
Yes, I'm fine. Thanks. How are you? How are you?
So I thought I was doing a recording because nobody was showing up for class.
Oh,
But
okay.
yeah,
So,
warm
okay.
welcome to you.
Yes,
I
yes,
think
yes. Thank you.
let's cover this together.
Yes.
So I've prepared because there was few apologies of
Okay.
students that were not attending, and so I didn't hear from the other students.
Okay. Thank you.
But we
Mm.
are going, so if you catch up the recording, or maybe just as a quick recap on what I was saying just at the beginning of the recording, is that you now just need to focus on past papers. So do your best to go through past papers and figuring out the kind of questions you will get in your upcoming test. So it would be a good thing to just cover past papers. And guys, if you are not yet, maybe I think a couple of you are not part of our um, WhatsApp group. That's also another interactive way for us to collaborate together. And the purpose of that is that when you are going through past papers, and should you encounter questions that are difficult and you want to have a quick assistance of your colleagues in the class and of myself, please do submit your questions there. It is as simple as that. You can take a screenshot of your screen or of the part of the specific parts that you are not understanding, and you can do it as simple as that, and send the picture and ask the question to the class. Class, I'm not understanding this. This is confusing to me, and the rest of the class would assist you as well as myself. So that's how we build really the practice side. So again, I repeat for one more time, please focus on past papers at this stage because you are preparing for your test, which I believe should be, if I'm not mistaken, could be next week, right? And any idea? I think it should be next week.
And I haven't checked the latest pass if
Pass.
they've
Yeah.
updated it. Yes. But
Yeah.
I'll check. But you're quite correct. Yes, I don't have the
Actually,
exact date. Yes.
let me have a quick look because in any case, it's on in our OneNote. Let me just check. All right. So for task one, it's Wednesday, the 19th of August.
Yeah. Next week.
And then which next week, Wednesday, right? So
Yes. Yeah.
all
Yes.
right, guys. So please,
Mhm.
Andile and the rest of you in the class, please, and that's the reason why I have emphasized that please work on past papers. Don't waste time. If you have any questions, share with the class. That's how actually you ensure that you're going to do well. Don't just, think about, oh, I'm going to use AI on the day of the test. Like we said last time, if you are aware of what is happening in the class, I'm very clear that it's not a good strategy. It's not going to make you pass the module because you're going to come back again next year. And I don't want to say, I told you so, you see. So do understand what you are doing, and that's the best thing. And AI, we are using it, but we are using it as to assist us understanding, right? And here is, by the way, an evidence. And the reason why I have to do this is to show the class and to show all of you that AI is not an enemy, it's just a tool, but it's definitely not something you can use to do the work for you. Because in any case, it won't benefit you because at the end of the day, you will fail the module if you rely on it instead of using it, to build actually your skills, right? So, all right. So we have about 11 questions. We are done with the housekeeping. Everything is covered. So you should know by this, and I've annoyed you with repeating the same thing, but it's just to make you understand that, listen, follow carefully these instructions. They're going to help you. I want you really to do very well in your task one and as well as in your task two. Don't also forget, because if you've done already, you've covered both theory for uh, learning unit one and two, right? You should be able also to complete the ICE tasks. They are there, they are available, you know where to find them, make your way there, complete them. You see, it's always, and they are properly built to really test you to see if you understood the theory part, right? Okay, so let's be done with all that. We just want to now focus on the practicals. And so we have 11 questions. And what we're going to do is I'm going to read a question, and I'm going to ask Andile to read also one question so we can go that way, because that's what the practice session is about. If you watch some of the recordings of previous sessions, previous semesters, you will see that students are enjoying this because it gives you the opportunity so to read the question and to see, and there's no pressure whatsoever, because even if you get it wrong, it doesn't really matter. You're not writing an exam now. All right. So I'm looking at cash flow, and that's question 2A. And it says to me that review the internal structure of the finance department below. I'm provided with the roles. I can see that there is a financial analyst. I can also see that there is a cash manager. And I can see the primary focus of the financial analyst, which is to look at future performance. And I also can see the cash. Obviously, cash will be dealing with liquidity. And I can see that the cash manager is really focusing on the current liquidity, right? The key deliverables, I can see that for the financial analyst is to deliver a budget, trend forecast. We covered that last week, the difference between budget and forecast, and then something very important, which is the planning, the P&L analysis, right? And then I'm looking at what the cash manager is doing. is the daily cash balances and then short-term borrowing, right? So the question is asked is that evaluate the following statement. A financial analyst is responsible for maintaining and controlling the firm's daily cash balances. Is this statement true or is this statement false? Is it true analysts control all cash movement, or is it false as shown in the data? Controlling daily cash is the responsibility of the cash manager, not the analyst. So what says you, Andile?
B, false.
Right? Okay, so let's see. So it says that that is actually true. It is false. The statement is false because the cash manager handles empirical daily cash flows. The financial analyst exists at the tree level, analyzing data to forecast future performance. And it makes sense, right? It's really logical. So well done on those, Andile. All right, so let's move on to the next question. And this is kind of a good way to have such a tool because we are linking the theory with the practice. So do you want to go for this, Andile? Do you want to read this particular case?
Okay, so must I start with this entity type, public corporation,
Yeah.
non-profit?
Just have a read. You know, they provide us with some information
Context,
there.
background,
We are,
yes,
but
yes,
we're
yes.
not sure if it's applicable or not applicable. But you will judge, right?
Okay, and
Yeah.
then okay, so okay, maybe I'll probably start with 2A universal application. Compare financial objectives of
Yes,
different entity types, just to get a sense.
that's right.
So the requirement is to compare financial
Yes.
objectives. So there's the entity type. It's there's public corporation,
Mhm.
which is primary input is shareholder equity. Financial
Indeed.
objective is maximize shareholder wealth slash cash flow. And then the other type is non-profit, donations or grants. Then says maximize service output or cost efficiency.
Indeed.
And
Mm.
then the question is synthesize the data above, true or false. Financial managers actively manage the financial affairs of many types of businesses, private and public, for profit and not for profit. So that's the question, is whether that's true or false. Right?
Yes.
So it's true or false that financial managers actively manage the financial affairs of many types of businesses, private and public, for profit and not for profit. And
Mhm.
for me,
Mhm.
it will be true.
Indeed, indeed. I think that I will second you also on that. And you see, you know, for all of you following, is that you will get these multiple questions, and obviously, I think the level of difficulty will just increase slightly as we move forward. But it does make sense because the financial manager is really not limited to a specific entity type, right? So, and that is true, right? So it's true even if the fruit, the goal, right, change from profits to charitable outputs, the tree, the tree itself is managing cash, budgeting, acquiring funds. These remain identical, right? So that's a good thing. So that was not too difficult, but now you can see, yeah, the level of difficulty slightly increase, but we shall see if indeed it increases, right? So corporate hierarchy. Review the standard corporate governance hierarchy. And they're providing us with the level 1, which is the highest, and then level 3 is operations, and level 2. That's interesting because I see the board of director Level 3 operations, I do agree that will be the CEO and the managers. That will make sense because those are the agents. We discussed that last time, the principal and the agent. And so, but we have the board of director, we have the CEO and the managers, and then we have the shareholders. So, and then in terms of function, the shareholders, they own the company. They are the one, by the way, who elect the board. And this is very good information that is provided because it's true. The shareholders, they elect the board. And the board is in charge of high level governance. It sets policies and then it appoints also the CEO. That is extremely true. That's true to the truest. But the CEO and the managers, they are there to run the day-to-day operations and execute the board's policy. This is beautiful. By looking already at that, this is a brilliant summary. This is your corporate governance. And this brilliant way to re-summarize this. Critique the following statement based on the hierarchy. The board of directors is responsible for managing day-to-day operations and carrying out the policies established by the CEO. That doesn't really make much sense. The board of directors. Critique it. Is it true the board reports to the CEO or is it false? The statement has the relationship backward. The CEO carries out policies established by the board. Let me not say anything because I have Ndile here. Ndile, what is the obvious?
The statement is false.
That's indeed. Thank you so much for spotting this because indeed, and we have the chairman, and that's why you will see in many companies there's a chairman who is not the CEO. And the chairman of the boards will be of directors would be they're in charge to, and it's a board, meaning that there's multiple people, and their role is very crucial, and they really, really represent the shareholders. And this provides beautiful context, sorry, to what we talked about last week in terms of the agency problem. This is really, really important because sometimes you might think that it's the shareholders who are fighting with the managers. Not really. It's they have representatives, and those representatives are the board of directors, right? So the board of directors is the representative. The directors are the representatives of the shareholders. Right. So let's move on to this. You can go ahead, Ndile.
Okay, so this is a liability and risk or liability risk. Assess the risk profiles of different legal business structures. So these are risk profiles. So you need to assess the risk profiles. So the structure is the sole proprietorship, which is a owner equals business. So in other words, the legal separation, it's none. So there's no legal separation between the owner and the business. And then the liability exposure is unlimited personal assets at risk.
Right.
And then the other structure is private PTY Ltd, separate legal entity, limited to capital invested in the business. So the question is to assess. So assess the statement. The sole proprietor has unlimited liability. Their personal possessions can be taken to satisfy creditors. Interesting. Yeah, it says the sole proprietor has unlimited liability. Yes, that's true. Yes,
It's true.
that's true.
That's true.
Yes, it's true. Yes, that's true.
Again, thank you, Andile. Great read, really great read. And class, remember that I shared with you that I have started a playlist for some of the basics. These basics are, and if you go actually on our channel, you will see that there is a playlist called BACC, which is basic accounting as well. And I'm also covering this there. So if you look, for example, at Learning Unit 1, in that playlist, you will see that I cover exactly these, explaining in depth also this. But very, very good read from Andile, and it is true. And just to show the difference between the different type of businesses or the structure for a business. And you need to be cognizant even when you're advising someone or in your paper, if this comes also, it should be something that you can deal with easily. All right, so we're moving on to question 5. So with question 5, we're going to look at executive elections. They went quite deep into this, but all this is covering efficiency. So we refer back to the corporate hierarchy table from module 3. Interpret the delegation of power, true or false. The president or chief executive officer, CEO, is elected directly by the firm's shareholder. So true, the stockholders vote for the CEO at the AGM, the Assembly General Meeting. Or is it false? Stockholders elect the board, and then the board in turn appoints the CEO. So that's quite a very good question. Andile, what are your thoughts?
Okay, but it says now to the corporate hierarchy table in module
Yeah.
3. So I don't have that, but anyway, I'll have to
No,
take a
no,
guess.
it's
Interpret
this one.
Oh,
Remember
is
this
that the
one?
one?
Remember this
Is
one? Yeah, yeah.
Yeah, is that the one? The
So,
one. So you're
so
saying,
yeah, the previous one that we did, yeah,
oh, is that the one? The mod? Yeah. Oh, okay.
yeah.
So we're
So,
there. Okay. So let's. Okay. Um. Oh, now we have to go back to the question. Then.
let me see. Can we? Just a second. So let's give it a chance. So it's just a follow up on that, but it's
Oh,
fairly
okay.
simple.
Okay. Oh, yeah. It says review the internal structure of the finance department. Is this the one?
No,
This is now cash
no, no, no,
control.
no, no, no.
We
Remember
did
this
this
one
one. Yeah. We
we
did.
covered
Yes.
it already. So this
Yes.
one, the first question, I think it requires me
Mm.
to still answer. Remember this one, we say that the
Oh, yes.
analysts
Yes.
control all
Yes.
cash movement. We say that this one was false, right? Remember
Yes.
that.
Yes. Yes. Yes.
And then
Yes.
as we move on this question, we say that is it a true statement when we say financial managers actively manage the financial affairs of
Yes.
many type of businesses? All right, so
Yes.
we say that that was true, that it doesn't matter if it's
Yes.
for profit or not non for profit, right?
Yes.
And then this is the question that we for the board of director. The question was it was false because the statement had the relationship backward. We covered that, right?
Yes,
So
yes,
now here
yes,
we are.
yes,
So it is still in the same oh, and this one we answered it as well, right? We say that
yes,
it's true because there is no legal separation and it was talking about the sole proprietorship, right? So we covered this one. And
yes,
so in the same logic, uh, how is the CEO appointed? Is he voted
Yes,
or is he appointed? That's as simple as that. Is he
it's
voted or
appointed. Yes,
is
the
appointed?
CEO is appointed. Yes, yes, it's appointed. Yes.
Indeed,
Okay.
indeed, indeed.
Yes,
Well
yes,
done. All right. So now question
yes.
6. Now we're gonna do a little bit of calculations because we're
Mhm.
done with some of the theories, and I think that
Yes,
they pushed a little bit. We pushed on the
yes,
theory side to
yes,
provide a good picture of what is happening
yes.
within companies. But now the
Mm.
cash imperative. Analyze the difference between accounting profit and financial reality. All right, so you have for month January and March. So that's what is provided to us. The accounting record for January is 100,000 credit sale, which is considered a profit. But for March, in terms of sales, there is zero. There's no sales that took place. And then we have bank account cash. Although they made sales, credit sales, but there is zero in the bank account in terms of cash. But in March, there is 100,000 cash that was collected. Right. So do we have an idea of what is happening here? Uh, does that make sense? And
Yes,
fifth,
yes, it does. Yes,
it,
yes.
it does make sense. Okay,
Yes.
perfect. All right. So I'm glad that you get it 100%. Now prioritize the focus of the financial manager based on the data. True or false, the financial manager places primary emphasis on managing the inflow and outflow of cash. And it gives you the two options. It's true, a profitable company can go bankrupt if it lacks the cash to pay immediate bills. And false, the primary emphasis is purely on accounting profits.
So for me, I'll say true. So the question is the financial manager places primary emphasis on managing the inflow and outflow of cash. Yes. I think the profits and losses are more focused on sales because he doesn't drive the profits on sales. That's me. I'm just taking a guess.
Yeah, and your guess is correct. So well done on that. Definitely well done on that. And by the way, since we are covering this, let's see what's question 7. Hopefully, we're gonna get a little bit a level of difficulty there. But I would like also in the meantime, if you would allow me, are you also able to see this one?
Yes, 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 I can see.
Yeah, because last week, I just want to combine with this. This is the test prep that we did last week. If you remember, I just want to touch on the numbers because the numbers are quite important. We covered the agency problem, we stopped there, and this one is an investment analysis, Moody, 2D, Foodie. As a new investor, you are looking into 3 potential companies to invest in during next financial year. We're going to
Oh,
take
yes,
it
yes.
just a little bit up the notch because I want to focus on numbers and I want all of you guys, if you have not been looking at the numbers, it should be time because that's what you should also focus on. Because although you're going to have some theory questions in your test 1, but remember that with learning unit 2, you cover the income statement as well as the balance sheets, right? All right. So as a new investor, you are looking into 3 potential companies to invest in during the next financial year. And we provide you those 3 financial companies. We provide you Moody, 2D, and Foodie. I like this one, right? So the matrix that you have there is that you have the annual earning you have the market capitalization, you have the number of shares issued, you have the interim dividend paid, you have the final dividend paid, because remember that the interim dividend paid, according to the theory, is that you could pay the dividends twice a year. And then you have the book value per share. You can see the different book value. And I'm going to pull my calculator. And Andile, I hope on your side also. Let's make this the practice session that is supposed to be. Right, so my calculator should be on the screen. Andile, can you confirm that?
I can see. Oh yeah, now I can see it. Okay. Oh, let me just
You
zoom
can,
out. Yeah, now I can zoom out. Okay, it's fine. Thanks.
you can see it. All right. So we want to calculate the price earning ratio. Price earning ratio. Very simple. We know that from our learning unit 2 price earnings ratio for all three companies based on your findings. Which company is preferred? Give a reason. So Andile, on your side, start calculating, or you can direct me what to do. How do we get the price earning?
Let me just do the workings and I'll let you know. Thanks. Thanks.
Perfect, right? Hope all of you, if you're looking at the recording, you can see my screen and you can see the calculations that I'm doing, because we were provided a book value per share, but we can't rely on the book value per share somehow. We need to rely on the actual value per share, right? Because it's the book value and the most current price, if we can put it that way. It's simple. So we need to look at the market capitalization. We can see. So the market capitalization is basically we're looking at the number of shares that we have, and we're looking at the price per share. So price per share multiplied by the number of shares. So we should get the market capitalization. It's almost like you want to say, what is the total worth of the company? So the total worth of the company at the moment, you can see this one, and it should be high because you can see this one is 7 million for Moody, and it's 12 million for 2D, and it's 8 million for Foodie. So pay attention to those things. But what are you looking at? You need to look at the number of shares that are out there. How many shares have been issued? Remember the shares? They speak about the shareholders, and the shareholders, who are they? Shareholders or stockholders, they are the owners. So you can basically look at the ownership. You can evaluate actually in the market what is this full company worth in the market? For the moment, Moody is worth 7 million. For the moment, 2D is worth 12 million. And how did you do that? You take the 120,000 shares, multiply by something to get this. So, but now if you want to find out what is the share price, therefore, you take the total divided by this. You take the 7 million divided by the 120. That's how you'll find that for Moody, it's 65. For 2D, you can see for 2D, it is 90. So you can see 65 is slightly lower than the book value. 65 slightly lower. 90 slightly higher than the book value. That's interesting already. That tells you something. So the current value right now has gone up. The book value was 70, but it has gone up. Isn't that interesting? So guys, start paying attention to the numbers and take it serious. That's the part where we want to practice. And that's the reason why you need to come to practice session, right? Now let's look at Foodie. You can see Foodie there. You can see the market capitalization. You can see divided by the number of shares, and it provides you this, right? But remember, it's price earning. So we take price divided by earning. This earning, how do you find the earning per share? Earning per share. Let me see if Andile is there. Andile, earning per share. How do we get the earning per share?
Mm, Yeah, yeah.
It's
Actually,
okay.
I
It's okay.
wanted
We
to,
can do it
I
together.
wanted to. No, no, I wanted to change. If you give me two few seconds, I just want to change the device so that I can see on a bigger screen. 2 seconds.
All right.
Then
Okay,
we can
but for
continue
the
behind.
for the rest of the class, guys, you can see, when you're looking at earning per share, you're looking at what is actually the earning. They provide you the earning. It's here, annual earnings. Annual earning is 4668. That's the annual earning. So the earning, the earning per share is just you need to divide by the number of shares. As simple as that. You take the annual earnings divided by the number of shares. And the number of shares is what? For Moody is 120,000. This is the earning per share. The earning per share is 3 rand and 89 cents. I hope you guys know. If you're struggling with this here, it shows you take serious the practice. You are not taking serious the practice. 2D, it's going to be, we're going to take the earnings of 2D, and it's 372. The reason why I need to practice in front of you also that you can see actually how you type these numbers, and you need to always double check your calculations, because you might know what to do, but you might get the calculations wrong. So 372,600, you have to divide by what? Remember, guys, this is learning unit 2. All this is in your learning unit 2. Make sure that you've covered the theory. You should not be wasting time with the theory, right? So you would know exactly. So the earning per share for 2D would be the annual earnings divided by the number of shares, and the number of shares is provided to us. Everything is provided to you. It's 135,000. See, as simple as that. So we know this is the earning per share. It's slightly lower, the earning per share, slightly lower than for Moody. Now let's go to Foodie. In other words, for the food. All right. Sorry. We are looking for the earning per share. We look for what is the annual earning. It's 796,500, right? Divided by what is the number of shares? And Dile, what is the number of shares for Foodie?
For the food is 150,000.
That's right, divided by 150,000. Right. And there it is. So you can see slightly higher. We have slightly a higher earning per share for foodie. Now, what they're asking us is to do, because in order for us to be able to compare this, if you've been reading, you're learning unit 2. Guys, we are not at learning unit 3, 4, 5. We are at learning unit 2. Make sure you keep up with the reading. Right, so for us to be able to compare, you will see that in learning unit 2, we don't know these businesses might are in different industries, so it might be difficult to compare them, and that's why we can use a metric called price earnings that will allow us really to have a ratio that will help us compare these different type of companies. So price earning for Moody, let's go. We will take the price. The price is 65 because we calculated it. 65 divided by the earning per share is 3. You can see here, it is in front of you. I'm showing you. It's 3.89 cents. This is the price earning. It's about 4.3. Yes, if you have to round it, you know the rounding, guys. You need to know how to do the rounding. If you have to round it, it's going to be 4.3. Andile, are we in the good? Does that make sense? For 2D, we're going to do the 90. You can see we calculated the price, the actual price, 90. Divided by what? We're going to divide it by the earning per share. The earning per share for 2D
Yes,
is here.
the formula makes sense, but I think
All right. It's cut a little bit there when you were speaking. So 90 divided by, oh, this one is not correct, right? This one is not 65. Okay, this one, if you can see here, guys, for Moody, pay attention here. It's 65 divided by 3.89. It was 16. So you can see that the price is 16 times. The price is 16 times bigger than the earning. For 2D, it's 32 times. This one, I need to delete this one. I don't know why I made a mistake on this one, right? And then let's move on now to the last one is foodie. We're going to take the price is here, 5.5. That's the price divided by the earning per share. What is the earning per share? It's here, 5.31.
I get 10.35. Yeah.
That's right. So we are agreeing now. So you have to see Moody. Moody is here. Guys, don't pay attention about this. This is a mistake. But we are talking about Moody, 2D, and Foodie. You can see that 2D is way, way bigger. 32. 32 means that the price is 32 times the earning. So now, based on this finding, which company is preferred? And you will see that this is all the calculations we did, as you can see. So we are spot on. And you will understand why 2D is big, but the conclusion is that Foodie is preferred because why? It has the lowest PE ratio. And that's the part where you need to get your reading right. Why is a low PE better? And Dile, any idea that you can think of? Why would a low PE be better?
I would say it's earning potential.
Yeah,
it's cheap,
absolutely. No,
it's got the potential.
You nailed it. You nailed
relative.
it. When relative to the price, isn't it? Your volume was a little bit shaky there, but I'm sure that everybody can hear you very well on this. So Andile is correct. Andile is correct. But guys, this is the type of things you need to practice, right? Now, what is DPC, DPS, the dividend per share? It's the dividend per share here. When you're looking at Foodie, for example, remember we were provided with the actual dividend that is paid out. Do you see the dividend? And we spoke, I think in our first or second sessions, we spoke about the dividend. It's what we pay out to our shareholders, right? And the dividend is provided to you guys. You can see the dividend is here for Moody, for 2D, and for Foodie. So when you're calculating the dividend per share, how do you do the dividend per share? You take the dividend that was paid out divided by the number of shares. As simple as that. So let's bring our calculator. Look at the dividend per share. I'm going to divide it. But since it was paid twice, what shall we do with this?
At the payments.
The final dividend paid, and then there is an interim dividend paid. So, okay, if I go with the final dividend paid, okay, and I divide it by the number of shares, do you see that? That's the dividend per share. If I go with the I'm saying if I go. So if I go with the final dividend per share, just to show the class, divided by the number of shares for 2D, 135,000. This is the dividend per share. If I go with the final one, which is Foodie, do you see that? Divided by what? The number of shares. The number of shares they are provided to you. They are in front of your eyes, right? So don't be intimidated by this. So we have some dividend per share here. You can see that the one that is paying the most, a greater number of dividend is the one in the middle, is 2D. So if it's based on the dividend per share, guess what? Foodie. Guess what? What you need to do, though, is you need to calculate the total dividend. If you based it only on the final dividend paid out, do you see that you will get it wrong? Because there were two dividends that were paid. So you need to add them up together. Again, I hope you guys can see it. Total dividend, you take one, it seems to me like there is a slight error here. Let me see, where is the, okay, yeah, it is. So Foodie would be better because you take the total, this total dividend. Just a second, 250,500 plus the interim payment. So they paid twice, right? Plus 120. So that will provide you with all the dividends that was paid out for the year. So remember, it's the full dividend for the year. And Dile, does this make sense?
Yes, yes, it does. I thought,
Yeah,
suspected that you have to add the two dividends, the
exactly,
interim and the
exactly.
final. Yeah.
But the reason why I just went and I caution everybody. If I just decided to go with the final dividend, I might choose 2D while the correct answer is full D. So be careful. If my theory is wrong and I just decide, okay, they say final dividend, right? Let me go only with this. You can see how I will go wrong while I need to add them up together. So guys, I hope that this makes sense. I'm going to share this because we have only 10 minutes remaining. And by the way, this is already shared with the class since last week, right? So in our chat here, this is there. And also on in our WhatsApp group, this is there. All right. So when you are watching the recording, always listen to this, because when you're looking for this, maybe on Arc, you're not going to find it. We can share it on Arc, but it's in our chat here. It is exactly in our chat here. And you can practice for the remaining of the questions as well. And Dile, is this helpful?
Yes, yes. Thank you very much. Thank you very much.
The reason why I had to shift gears is to show you that when you're dealing with theory questions, some of them might be quite easy and you can even relax a little bit. You're like, oh, these are easy. But you must also now start focusing and shifting your mind that we are doing finance, and finance is a numeracy module. The theory part is to make you understand the concept, but we move quickly to the actual practice and the calculations. So that's the point when I say practice, take it quite serious and really practice. So guys, even though you couldn't make it, I'm gonna beg you to practice. And should you struggle with any past papers, share the question with the rest of the class. You can also use this tool. This tool also is a way to prepare you for test one. And the questions, yeah, I don't know if Andile, you would agree with me. Some of the questions are challenging, right?
Yes, yes, they are. They are,
Yeah.
definitely.
So it's not that
Yes,
easy, right? You have to
yes,
scratch your head.
yes.
All right. But guys, I've provided all this. So there should be no reason why you would say that, I didn't get the time to practice, or we didn't cover this properly, because I'm providing you with the interactive practice. I'm providing some of you love past papers because you love pen and paper. You can look at the paper, and it's not a bad thing, because your final exam is going to be a written exam on campus. So if you are the kind of person who prefers the paper, pen and paper, you have past papers, you can practice on a paper quickly and all that if it works for you. But the purpose here was also to show you the use of the calculator. Just try to make sure that you double check your calculations, because sometimes you might know what to do, but maybe you punch wrong the numbers. You see, so, and in fact, actually, we did that here. I can show you. There's one of them here, this one. You can see this one was an error. Easy to make mistakes, right? So it's to show you that you need that kind of practice to be very comfortable, because sometimes the student might know what they're doing, but they're just making silly mistakes on a calculator. But start using a good calculator, have a good calculator, practice, and guys, everything will always be provided to you. So you see, it's just you need to know how to use these numbers, and your theory needs to be. I want to leave by, because Andile is here, and Andile is playing the perfect role to represent the entire of the class. So Andile can give you some of the impression that he has. And Dile, I just want to give you maybe 2 or 3 minutes to just give your impression. What you see is good. What can be improved. Personally, how do you find this? This is quite important.
Yes. So the question is, what are my thoughts? I'm just thinking people are throwing money at the stock exchange without even understanding these basics. So for
Indeed.
me, it's just sad that it's the first time I've seen this put side by side to choose between the companies. You won't find such material as an example. It's normally an analysis of one company. So when you only
Yes,
have one example, like you don't have Moody, Foodie, then you don't know that what it actually means, you know. So it
absolutely.
was just quite interesting that at some stage I thought one was a good company, one was not, and then finally I figured out how you actually find that which is the right company to buy. So it's quite helpful. I think.
I'm very, very glad. And please start settling into this. Especially from Learning Unit 2. Guys, if you didn't read Learning Unit 2, go and read. Look at the different ratios because the theory is already covered. We've already covered it. We've already provided you with all the lectures. You have all the theory covered. Now it's time to practice. Remember, you can understand it, but if you are not practicing it, it's not going to make more sense. And plus you develop a skill and you're able to see things that other cannot see, because if you only focus on the theory, it's going to be difficult for you when you get hard questions. But somebody who's practicing regularly, he will start spotting things. You see, for example, somebody could have been tempted to use the book value of the share. You can easily, because you're like, oh, they provided me with the book value. But only a student who's practicing and who's mixing theory and practice would understand that, wait a minute, it's book value. I need to find the actual share price, not just the book value. So I hope this is helpful, guys. And that was the purpose of this actually session, was to shift gear quickly. I started with easy theory questions, but then I shifted quickly for you guys to understand why it is important for you to be consistent. Every week practice, because it can be painful when you're going to write the final exam and you feel that you lack so much practice. And trust me, I have to warn you, and I'm doing this for your good, not to make you scared. Is that some student hand a blank paper, or they will have questions that they couldn't answer some questions. You will find you will find questions that are blank, they couldn't answer because they were not taking serious the instructions and the warning that was provided, right? So please, it's meant to practice on a weekly basis. And if you do that, you don't miss class, you always keep up, you will do well. Yeah, and Dile, a last one from you. So Andile, you raised your hand. I'm not sure if you have something.
Yeah,
Yeah.
just a quick one. So the share price is the share price at the time of application. Right?
Yeah, it's the share price. The share price should be a current price. You see, the book value is something totally else. It's like the book value of your car and dealing. It's when you bought it,
Yes, I
that
know.
was the
In
book
other
value.
words, at the time of
Yes, but the market price is the share price. It's what is the actual price now, right? So I trust that that's clear. Any other questions you have, Andile?
no, I'm covered. Thank you. Thank
Perfect,
you very
perfect.
much.
Keep the practice, and
Thank
you
you,
you
covered.
know you know where to find us. Keep in touch should you have any difficulties, but we should be able to stop it. I'm gonna stop the recording now, and that's it. And Dile, thank